Hello and welcome to a quick update from Smaulgld on gold as a store of value. We're going to look at some charts that show how gold is a store of value. Gold's remarkable store of value shown in charts. That's what we're going to get to here. So gold is a store of value, and a lot of people view it as sometimes a speculative investment, or they compare it against the stock market, or they compare it against Bitcoin. Well, if you do that, you're going to come up with whatever conclusion you wish, but I choose to look at gold as a store of value, and I'm going to show you some charts that proves that gold is a store of value, has been for 5,000 years, and has been the last 10 years and the last 20 years. We're going to take a look at those charts. So if you look at gold as a store of value and a portfolio insurance rather than a speculative investment, it shines very brightly. Let's take a look. So gold as a store of value. If you compare it to the stock market, it's like comparing apples to oranges. Gold is a rock. It sits there. It's immutable. It doesn't change. Of course, stocks have the potential to do better and give you better returns because companies have human inputs that are striving to create profits and value. Gold doesn't strive to do anything. It already is a perfect rock. Now, under proper management, with people all working in unison with the right employees, a company can grow exponentially. And under the wrong management, of course, a company can become worthless and go out of business. Since the beginning of time, gold hasn't changed. Companies have come and gone. Yes, they provided value, but a lot of the big companies from 50 years ago are not around anymore. So gold is a store of value because it's a rare metal with useful properties and beauty. And it can't go out of business. And it can't be created in endless quantities. Gold doesn't change, it doesn't borrow money, it doesn't declare dividends, it doesn't defend against lawsuits, it doesn't innovate, hire workers, or go bankrupt. But those are the traits that allow gold to preserve its value. It never changes. Let's take a look. Let's say you bought gold every year. 1 ounce every year, dutifully bought 1 ounce of gold. And let's say you bought it at the average price of that year's gold price. So in 1998, you plunked down $294, you got yourself an ounce of gold. Did the same thing in 99, you paid $279, 2000, the price was stable, you paid $279. And over the 20 years, buying an ounce of gold each year, you spent a total of $16,583. Which meant your average cost during those 20 years for your gold was $829. Now the price today is, at least last I looked, was $1,255. Well, that would have given you, if you had bought gold every year at the average price, a gain of about 51%. Now that gets people to thinking, oh, gold is a tremendous speculative investment. Look at those gains. I did even better in some respects than the stock market. But that's not really the way to look at it, because if you smooth that out over time, you're not going to get those types of gains in gold versus your currency, unless your currency has, which some people are anticipating, your currency collapses. But as long as the currency doesn't collapse, gold will preserve its value and will rise against that currency if the currency has weakness. But dollar has been one of the more stable currencies over the last 20, 30, 40 years. So we use the dollar price of gold to illustrate that if you bought gold every year for 20 years, you got ahead 51%. Oh, but you say in the last 10 years it hasn't been that good. It went up, but it came way down and people lost money on gold. No, they didn't. Let's take a look. Last 10 years, if you bought gold every year at the average price, 2008, 872, 2009, 72, and so on, even if you bought in 2012 your 1 ounce and you paid close to $1,700 for it, if you continue to buy every year, for 10 years, for the last 10 years, you would have spent $12,633, which means you would have spent on average each year $1,263. The price today is $1,255. What do you see from that? You didn't lose anything. You didn't gain anything. You didn't lose anything. That is the definition of store of value. So an annual purchase of 1 ounce of gold, the average annual price every year for the last 10 years, has resulted in your preservation of value versus the US dollar. There it is. Now, if you want to read more, Here's an article you might be interested in: gold and real estate are assets, not investments. And this one, gold as insurance, the lesson of Brexit. If you're interested in buying gold for yourself, you can do so through the Smaulgld site, through affiliate agreements we have with BGSC, Golden Eagle Coins, SD Bullion, Money Metals Exchange. It's not investment advice that you go out and buy gold, but if you are interested in doing so, you can compare pricing and shipping at these merchants, these bullion dealers, and Smaulgld will get a small commission. And you could do the same with silver as well. And if you've enjoyed this video, please consider making a small donation to Smaulgld via PayPal or via Bitcoin, or consider becoming a patron on Patreon. The links are all below. Thank you very much.